Could a weakening economy send the Bitcoin price flying? We've been getting some data recently that's showing that maybe the US economy is not doing so great. In this video, we're going to go through the data and talk about why this is bullish for Bitcoin. Before we do get into it, please make sure to like the video and subscribe to the YouTube. Really appreciate your support. I'm also going to put a QR code down below for a Bitcoin tip. So if you want to support the channel, feel free to leave me a little tip. Now let's get into it. So right now, everybody is kind of focused on this September Fed meeting and the fact that it looks like we're going to get a rate cut, which I know a lot of people are excited about. If we do get a rate cut, that means that assets like Bitcoin will probably head higher, or maybe they're heading higher right now because it's getting priced in. And the reason that we are going to probably get a rate cut this week is because we have been getting weaker economic data. We can look at the August inflation data. We saw that the PPI came in lower than expected at 2.6% year over year. We were expecting a 3.3% year over year number. And we can actually go ahead and take a look at a little chart of the PPI for the last couple of months here. And as you can see, we saw the PPI jump up big in July, and then the PPI fell in August. And this really just makes me think that maybe this data is manipulated. I think we know by now that this data is manipulated. So it's really hard to trust these numbers, but we know that the Fed reacts to these numbers. We know that the Fed uses these inflation numbers to make their decisions. So with the producer price index heading lower, right, with this inflation number heading lower, maybe it's signaling that we're seeing weaker demand out there, and that's more of a reason for the Fed to cut rates. We can also look at the CPI, or the consumer price index inflation, which came in at 2.9% year over year for August, which was the expected number. And although we've seen inflation be sticky according to these metrics, I for one think it's just higher, to be honest. When I go to the grocery store and I see orange juice has doubled over the past couple of years, I don't think we're looking at an inflation number that is this low. But with these, metrics staying lower, it's going to give the Fed more reason to cut here. And that's why we're seeing that people are pricing in a cut for this September Fed meeting. Now, if we look at the jobs data, I think that this is telling the real story of why we're seeing the markets price in more rate cuts and a looser monetary policy. And the big data point that I saw that really caught my eye over the past couple of weeks is that the BLS, the Bureau of Labor Statistics, overestimated the number of jobs added over a 12-month period ending in March of this year by 911,000 jobs. That is a huge miss when we look at the data, right? That is a big deal, right? That means that the economy is not doing as good as people previously thought. And this really just confirms to me that all this economic data that we get is really manipulated, right? We had a big election at the end of last year, and maybe the reason that these job numbers were overestimated were to make the incumbent, right, the Biden administration or the Harris administration look better heading into this last election. And really just looking at all this data, I'm glad we're going through it, and I want to go through it because I know that this is what the Fed reacts to and what the Fed uses to make their decisions, but it just seems like it's always so inaccurate and it always gets revised. We saw that 22,000 jobs were added in August, but we've also seen that every month these numbers get revised heavily. So what is this number going to look like in a couple of months here? I hope that the markets are figuring out that they really shouldn't be reacting too much to this initial number because it's a false number, right? It's not the real data. So we will see what comes out in a month from now, a couple months from now about the August jobs, right? If it really is 22,000 jobs added or not. We also have seen that the unemployment rate is around 4.3%. Not sure how accurate that is, but I guess that's what they're saying. And we can go ahead and take a look at a cool visual here that I saw on X, which was interesting, which shows the relationship between job openings and the amount of unemployed people. And for the first time since 2021, we've seen that the amount of unemployed people is higher than the job openings. If you look at this visual, Obviously, in 2020, we got hit with COVID and everyone got laid off, right? So we saw the unemployment rate spike. And because we kind of saw the economy shut down briefly, we saw job openings head lower. And then around 2021, 2022, right, all the markets are going up, everyone's hiring, everyone's like, the economy is booming. But it was really like this artificial boom, right? Because of all this COVID spending. Now we're kind of starting to see the repercussions. But we saw more job openings than unemployed people around that time. And now we're starting to see that unemployment, the amount of people that are unemployed is rising higher than job openings. And that's not a great sign, right? If there's less job openings, that maybe means that companies are shutting down, businesses are shutting down, or they're not expanding, they're not hiring more people, maybe they're letting more people go. Maybe this has to do with something like AI taking some of these jobs, but it's not great if we see the unemployment rate had or the amount of people that are unemployed had higher than the amount of job openings. Some other data points that caught my eye are that we've seen over 806,000 layoffs reported in 2025, according to the BLS, and I'm sure that has a lot to do with these government job cuts that we saw earlier in the year due to Doge and just due to the government cutting back under this new administration. And then we've seen 446 major cases of bankruptcies in 2025, according to S&P Global, and that's the most in 15 years. So recently, we're really starting to see some data that the economy is not doing great, right? It's heading in the wrong direction. And with that, we know what's going to happen, right? When we see the economy contract, we know that the Fed has to loosen their monetary policy. And when that happens, we typically see asset prices head up. I took a look at Polymarket and it looks like we are going to see a Fed cut for September. Just looking at the prompt that they had for this upcoming meeting, it looks like there is a 90% probability that we see a 25 basis point cut, and there is a 9% probability that we see a 50 basis point cut. So it's Monday, we have the meeting on Wednesday. I would suspect that we're going to see a 25 basis point cut, and I think that the markets are pricing that in right now. A little surprised, we're seeing Bitcoin struggle a bit here. Checked this morning and we're under 115,000. And I also looked at another prompt which showed how many rate cuts we're going to see for the remainder of 2025. And according to this prompt, there is a 52% probability that we see 3 rate cuts for 75 basis points. And there is a 32% probability that we see 2 rate cuts for 50 basis points. So it looks like the markets are really starting to price in some rate cuts here, which is great for Bitcoin holders. It's good for gold holders and equity holders as well. Although if the economy is weakening, that's not great for equities, right? That means that businesses are suffering. And really, we've been expecting rate cuts this year from the beginning of the year, and we just haven't gotten them. So I'm really enticed and interested to see how assets respond in this Q4 period, right? If we do see looser monetary policy, could we see some QE as well, right? Could we see the Fed come in and buy up some long-term US Treasury bonds and print money to do that? And what is that going to mean for asset prices? So I think that the macro environment is setting up well for Bitcoin. These other assets, I'm not as sure about, right? I know that typically when the money supply goes up, it's going to mean that all assets are going to rise in dollar terms, but I'm looking at things in real terms, and I think that Bitcoin is going to be the winner here. I think the big fear is that maybe we see the Fed wait too long, right? Yes, it looks like we're going to get a cut here in September, but what if they hold off on cutting after that? I understand why they'd be hesitant to cut because they don't want inflation to run out of control, but if they keep things too tight and things break, before we see this liquidity wave, then we could see assets head down before they head up. Now, if I was a betting man, I would bet that they're going to preemptively add liquidity to the system, right? They're not going to let a big crash happen because that's just going to lead to a big mess that's going to require more money printing. So I think long term, the thesis remains the same. You want to be in scarce, uncorrelated assets, and I think Bitcoin is the best one to be in. That's going to wrap it up for this video. If you didn't like and subscribe, please make sure to do that now. Thanks for watching. I'll be back soon.